Good afternoon, everyone. A warm welcome to today's exclusive webinar on live trading market, hosted by BlinkX and powered by JM Financial. It's a significant session, especially with today being an expiry day. We're joined by Mr. Akshay Bhagwat, a esteemed research analyst who will be sharing valuable insights and setting the stage for today's discussion. Welcome, Akshay. And to all our viewers, if you have any question related to the derivative segment, feel free to drop them in the comment section. Our research analyst will be addressing your query live during the session. So stay tuned and make most of this opportunity. So over to you, Akshay.
Yeah, thanks, Niharika. And first of all, good afternoon and welcome to all the participants who have given their time to the BlinkX platform for hearing us out on the weekly Sensex expiry today. So, first of all, let's take a broad overview of how things are shaping up for today. First of all, there was a big event last night. There was a 25 basis point cut by the Fed, the US Fed. And this was something which the market had anticipated. This was already priced in. And the positive part about this is that in this year 2025 there are two more rate cuts which are happening, which is sentimentally positive for the global markets. Now, with this backdrop in mind, you have a situation where Nifty has opened gap up, the Sensex is gap up, and we are looking at the next 3 hours as to how we deal with the market, especially on the weekly expiry day for the Sensex. Now, if you look at the Sensex, it is up by almost around 300 odd points as it stands right now. We are trading at around 82,700 odd levels roughly. And what I would do is I have placed a chart in front of you, which is a combination of a candlestick chart with Bollinger Bands imposed on them. Now I'm further adding an RSI, which is a relative strength indicator, which would help me as to how the prices are playing out. So this is the setup which I normally work with, and I zoom in now into the intraday charts, which is a 30-minute chart using the same setup, which you can see on the screen. Now, if you look at post opening, really the markets or the Sensex has done nothing. It has been confined at a range. Roughly 83,000 is the low, is where it is pivoting, and it is almost at the upper end of the Bollinger Band, which is a resistance zone for intraday front. The lower end support, which is more like a moving average support, is somewhere around 82,750 odd levels. This is the intraday support, and there is a very less probability that it can fall to 82,400. So right now we are only dealing with this particular zone for the next 3 hours, support of 82,750, and in case it recovers from here, we can look at target till 83,150 to 83,200. So limited upside, range bound scenario. This is what initially the technical parameters are hinting at. Even if you look at the RSI here, the RSI is well above 70%. We are at 75%. So already on an intraday front, we are dealing with overbought parameters for the Sensex. But considering the fact that the news overnight has been positive, the data points in terms of FII buying has been positive, options data has been positive, the chances of a fall in today's market look a very low probability, and we will be trying to time our trades on the positive side for the remainder of 3 hours. Now we will just take a look at how the options chain is playing out. For this, I'm going now to the options, which is you can see on the BlinkX screen. Options is where I'm selecting. And once you look at this entire thing, 83,000 is where the spot or the current market price is for the Sensex. Immediately I zoom in to the two parameters which I always look at, where is the highest put and calls placed. This will help me to understand where the option writers are placed. So 83,000 strike in put is where the put writers are. If you look at 83,000 put, roughly the premiums at this are 50. So roughly 82,950 is the support if I add the premiums to it. The put writers at 83,000 83,000 will get shaken or they will exit the writing bets only if we go below 82,950. So that is the assumption I'm going with. So 83,000 is the support, and call writing is at 83,100, where the premiums are roughly around 50 points again. So 83,150 is the upper end of the range. So range of 83,150 on the upper end, and roughly around 82,950 on the lower end is the range we are dealing with for intraday. And looking at such a tight range, especially in a volatile product like Sensex, just makes me feel that it's going to be mostly a range bound day, which is going to be more favorable for option writers. Even if you look at the PCR, which is open interest put call ratio, it is above 1, which means that the put writers have an upper hand in today's scheme, the way the data is positioned. Now, what's the next course of action is how 83,000 call and put are positioned. 83,000 call has an addition of around 67,000 in open interest. Puts have an open interest addition of 1.84 crores. So roughly, it's very clear that put writers have an upper hand today, and it is mighty difficult that 82,950 support will break. So now once the setup is clear, my range is clear, how I am going to trade this day is clear. Now what next I'm going to do is get back to the charts, and I'm going to give you two actionables for the day as to what an option writer will do and what an option buyer will do. So as an option writer, the first thing is you are going to write puts and calls with the expectation that the market stays in this range and you benefit out of the range bound scenario in this particular market. So for this, I am going to write strikes of 82,900 or below, and I'm going to write calls at the strikes of 83,200 and above. So let's see the premiums first of all. 82,800 has a premium of 16 rupees. I think this is more safer. So I will sell 82,800 put at 15 rupees. I will sell call of 83,300, which is 11 rupees. When I sell both calls and puts, I'm roughly getting a premium of 16 plus 11, 27 odd this points in Sensex. This is the maximum profit I can make in. And for next 3 years, 27 points per strategy is a very good return. And this is what an option writer ideally looks for. Stop loss will be above 83,200 or below 82,900. So this stop has to be strictly followed because we are writing options. We are thinking about a limited profit, and we need to have a stop loss in place whenever we have a short strangle strategy. So the probability of a writer or a strategist making money in this today's market looks higher. Option buyer, the day is a bit difficult because the market looks a bit range bound. So what I will do is I'll tell you that if you were to buy today, the best strike to buy is 83,000 put, because I think that is where the entire action is, looking at the open interest and volume action. So I go on the price point again, and if you look at this 83,000 where the spot is, 83,000 put, the call premium in this particular strike is around 103. This is the last uh, traded price. At this point, if you were to trade 100 rupees is too expensive to buy. I think there are two things which you need to note. If you are taking a trade right now, you are looking at buying call of 83,100. If you can wait a bit, which I would suggest, go for buying 83,000 call, but wait for the premiums to drop from 100 rupees to 50 rupees. So this is more of a patient game. Patiently, if you wait and you get a slight dip of 80 to 950 in Sensex spot, which is 40 points down, easily this premium at the strike of 83,000 will become half. So buy 83,000 call at around 50 rupees, stop loss 0, first target 90, second target 110. This is a hero zero trade for today's expiry, high risk trade, but this is what would benefit an option buyer. It is a waiting game. If you feel you want to do it right now, it is very high risk. You have to go for 83,100, but again, the probability goes down. I will say at 50 rupees, I think it is again better you try to get 83,100 call somewhere around 35 odd rupees. If you get that dip, it is worth buying. Buy at 35, 83,100 call, stop loss 0. Here your target potential should be smaller. So target will be around 55, first target, second target can be best of 70. So these are two buying call which I have recommended. It is just about patiently waiting it out for the right appropriate entry, because at this point of time, if you were to buy, trades do not work that way. It is a waiting game. We need to buy at support. Support is 83,000, 82,950 zone. Timing is the way for today's trade. If you want to buy it now, 83,100 call is which you buy. Slight dip around 35 makes it more lucrative. If you are buying 83,000 call, you have to wait it out. In case you get 50 rupees, then only buy it, is the advice for today. So, all the best for the remainder 3 hours of expiry in the Sensex, and follow the levels, follow the calls. And I think, as we have been recommending to you week on week, all our trades are going perfectly right. I think you should be on the winning side if you follow the levels and stick with the trades given by the BlinkX team. Thank you so much.
Thank you, Akshay. We've got a couple of questions. So let's start. Mr. PK Sahu says, hi, hello, Sahuji. And we have Jyoti Singh asking us, Nifty movement, please. She wants to know about the Nifty movement.
Uh, See, Nifty movement, first of all, look, Nifty is at 25,420 right now. Now, really, the question is how Nifty moves from intraday. It is more like, I think if it is intraday, it is range bound. But broadly, if you look at this chart, the resistance for Nifty is somewhere around this point, 25650. So this is the ultimate target, 25650 spot Nifty for the month of September. That is the target you can hold Nifty for or look for forward to. If you want to note where the resistance are, there is a temporary resistance at 25,500, because there is where some option call writing positions are. So near 25,500, you can expect some bit of profit booking or sideways action, but that is valid more from a short to weekly perspective. Eventually, for the entire month of September, you can look forward for target of 25650. The support for Nifty is 25,200 in the current situation. View is positive.
Okay. Thank you, Thank you, Akshay. Thank you, Jyoti ji, for asking the question. We have Harshal asking us, can I buy 83,000 put at present? Okay, at present, can I buy put at 83,000?
No, the answer is no. I have given the reasons for the same for today's weekly expiry. What is the view? How we plan to go about it? I have a positive view. It is just about timing the dip. I do not see markets correcting today. You have to form a view and go with it based on whatever data points are best assessed. I think you should be on the positive side for the day. Buying puts, I would not recommend for intraday.
Okay. The next question is by razthemystery at gmail.com. I must add that it's a very creative name and definitely caught our attention. It says, please show order flow.
See, order flow. Look, you need specialized softwares for tracking order flow. I think we can get in touch one to one on, because with the limited time, it's very difficult for me to explain to you the concept of order flow at this point. So we can take this question offline.
Okay. Same person's asking us, please show demand and supply zone.
See, demand and supply is more like where the support is, where the resistance is. So now, if you look at the options chain for Nifty, what you have to see is where the highest call writing is, where the highest put writing is. So wherever the number of where highest put writing is, that is the demand zone. Where highest call writing is, that is the supply zone. So 25,400 is a demand zone, 25,500 is a supply zone. Buy near 25,400, sell at 25,500. That is how the demand supply dynamics are working for short term based on the options data.
Okay. Thank you, Akshay. Do we have any other questions? We'll wait for another 10 seconds. If you're getting any live questions, and okay. No, this is all the questions that we have, Akshay, for today. Uh, so we will wrap this session up, and I would like to conclude. Okay, we have one more order flow go. Okay, it says order flow go charting or quant. Um, can you please rewrite that question, please, for us?
I'm sorry, I'm not able to view the question right now.
No, it's not this, but okay, we can take it offline. You can please write to us on support@blinkx.com. We will help you with the question if you're not able to answer it here. Uh, so we say we'll conclude this session and webinar today. Thank you all for being a part of this derivative webinar. We hope you've gained valuable insights. And for more market knowledge, tools, and strategies, stay connected with BlinkX, powered by JM Financial. Have a great day and happy trading. Thank you, Akshay.